Welcome to another Trading Justice podcast. This is Mark Justice. I'm joined with my illustrious, I love calling him that, brother Matt. We're here to break down a very, very busy week in the market. Lots of talk on AI, naturally the war with Iran, how it impacts markets. We'll talk about that in our feature segment. Lots of dark clouds from Jamie Dimon, AI Anthropic CEO talking about the end of the labor market. There's a lot to break down. NVIDIA earnings. Look at the week ahead. This is going to be a very, very busy podcast that we will dial you in on everything going on. And we'll take a look at the technicals to start. And listen, there is nobody better to break down technicals and break down the art of becoming a precision trader than my brother Matt. Matt, in a couple weeks, you have an event where you are going to talk about precision trading. Tell me about it and how you do it.
Precision trading is an awesome webinar if you're looking to really kind of do two things. Number one, get a real base understanding of technical analysis in general, from an introductory perspective, but really focused on kind of swing trading, swing and position trading. I like to call it market assassins, precision trader, pinpoint on entry, pinpoint on stop loss, pinpoint on target. There's no debate. You process the trade, you prep the trade, you place the trade. And so if you're looking to learn how to swing trade, position trade, Precision Trader is an absolutely great kickstart for that. And that leads into an amazing master trader that happens the Monday and Tuesday after that. So on March 17th, Precision Trader, hit the link in the description and sign up for free. It's an amazing webinar. You're going to have you're going to learn a tremendous amount. And as always, you're going to have a ton of fun.
Yeah, bro, you know how to teach. It's going to be a great event. You also know how to break down a chart. I'd like to spend a couple minutes on the technicals before we get into what really has been a busy week. It seems like an eternity since we were talking the Citrini research piece. It feels like
That one came and went pretty quickly.
Yeah, that came and went real quick, and there's been a lot that's happened between then and now. But Matt, we came down hot. We'll talk about the war here in a few minutes, how markets interpret the war and some of the issues facing the markets with the war. But you came in hot and heavy to start the trading week. Came right into support. Didn't want anything to do with breaking that support level, did you?
No, and there's certainly something to say about the technicals, and I'll get into that just in one second. I just want to say off the top of the show here, thoughts and prayers with everybody over there in the Middle East right now, dealing with what they're dealing with, specifically to our servicemen and women out there serving, protecting our freedoms every second of every single day. Just got a lot of love, respect. So thoughts and prayers with our fighting men and women over there, regardless of what you think about the war. That's a political conversation. That's a policy debate. One thing I never debate is the hearts and the minds of our men and women who serve this country, some of the bravest of the brave. So thoughts and prayers with our servicemen and women right now. So
Amen.
that's I just have to say that off the top of my head because we're going to be talking about technicals and how price is impacted based on war, but let's not lose focus on what the real important story is, and that's on the human interest side of the equation. But on the technical side of the equation, specifically on market-centric thoughts here, it's not just today, gap down, gobble up situation that really dominates my thought process here from a technical perspective. I've been talking about the range between, I'll just label it 6,800 and 7K for the better part of the last few months in the market. And, just in the last few weeks, we've had major catalysts come out from a Fed policy statement to NVIDIA earnings to literally a war with Iran. And yet, regardless of what news comes into the market, good, bad, or ugly, market's just kind of humming along, just kind of stuck in neutrality here. NVIDIA came out a couple weeks ago with an amazing earnings report, and all of a sudden they came right back down. Well, that was just last week, going into a potential breakout of 7K. NVIDIA reports positive earnings, amazing earnings, and yet market came right back down. And then you go, obviously through the weekend and from Friday night on, everybody's been glued to Twitter, TV, whatever it is, watching those, the sites coming out of the Middle East right now. And there was a lot of concern coming into the market that we were going to deal with gapping situations in gold, silver, oil specifically, maybe even a little bit of Bitcoin, and definitely on the marketplace. I mean, right when the news hit that we were going to war with Iran on these military strikes, the thought process was stocks down, commodities up. And that certainly did play out initially, but only initially. Market gapped down into a very important support level, went right back up into the middle of the range. So whether it's NVIDIA from last week, excuse me, the central bank from a few weeks ago, military intervention in Iran over the weekend, we're still stuck in that 68 to 7K range. And so, my first question is what can spark, some degree of trend here? That's number one. And number two, what's easier? What's the easiest path here on a trend to develop within the S&P 500? And I'm very open-minded to that
Yeah.
conversation. I'm very open-minded to that conversation. But when I look at the longer term side of the equation, and I look at, say, the longer duration charts, not the weekly chart, but the monthly chart, for example. I have this going into from the pandemic until today. I have this going into wave five. And so we're late stage wave five in the longer term trend. Okay. So we know we're late stage trend analysis here.
So,
Doesn't,
yeah, and we just explain real quick to those who don't know what like
yeah.
stage 5 is. Like,
Stage five is the last leg within the backdrop of Elliott wave theory before you go through what's called the ABC cycle. I always think about this through the reversal lens, like the art of the reversal, continuation patterns versus reversal patterns, and so on and so forth. But wave five is the last leg within the backdrop of a trend according to Elliott wave theory. And so when you go into a wave five and you start to see patterns develop at the end of wave five, as we're seeing right now on the longer duration charts, this would be a consolidation high base as of right this very second. But you're at the end of that trend when you see those types of patterns develop. And so we're at the conclusion of wave five on the longer term charts. This is not debatable, by the way. This isn't a hypothetical what if scenario. We are already at the ending conclusion that nothing has to transpire in the future for this previous trend to be over because this previous trend is over. Now you're talking about the patterns that develop at the end of a trend. And what patterns develop at the end of the trend? First, continuation patterns develop, then reversal patterns develop. Well, right now you got mixed time frames here. On the longer term chart, you have wave five extension and most likely seeing a high base here. You come into the shorter the weekly chart and you have this as base consolidation, but in that base consolidation you're starting to see it roll over a little bit. As you can see, kind of the support levels start to slow down and resistance starts to creep in, and so you're starting to see it roll over, and this would suggest that the weekly chart would be going through some degree of ABC cycle, which is a corrective phase against the market on the longer term. And so in general, we have the market ranked at in the newsletter at a positive 30. That's a slightly bullish ranking. That takes into account where we're at in the longer term trends and then seeing this slowdown in the shorter term. And so on the longer term trends, things look perfectly fine. Still bullish uptrends. The weekly chart starting to turn over, and the daily chart is neutral but choppy, is what I would describe it. And so there's mixed time frames here, and it's not an easy technical read. I would say the path of least resistance is down, is ABC cycle and correction. But I'm very open-minded to see how this development plays out because that high base on the longer term chart suggests breakout.
yeah, thanks for that technical breakdown. Always like getting at the start of the podcast your technical breakdown on the big picture. Sometimes there's an interesting short-term picture, but in the range-bound
It's not
mechanics,
an
it's
interesting.
not today. It's
No, the interesting technical conversations are on intraday timeframes, but we don't do that in the podcast. We do that every single day in our Traders Lounge. And if you want to get my intraday levels every single day. I identify the intraday levels coming into the week in the Tackle Trading newsletter every single week for our pros, and every single day we dial in those intraday levels in the Traders Lounge. So if that is something you are interested in, I promise you my intraday levels are as good as they get out there.
Yeah, thank you for that, brother. Now, there's a lot going on. I want to break down some of the nuggets
Yeah.
in the market last week before we get dive into the war. First of all, let's talk NVIDIA earnings. NVIDIA, came out, and once again, it feels like that was a year ago, not just a few trading sessions ago. And some interesting things came out of that. But on the raw numbers, Matt, your take, from what I've listened to you on a couple different occasions, they were pretty stellar, weren't they?
I thought NVIDIA had a rock star earnings report, and there's nothing that I have seen in the secondary price response to 2 straight days down to the 200-day moving average that would change that fundamental conversation. I don't look at. I don't think price is the truth sayer of all things fundamental analysis. I thought NVIDIA's earnings report was a great report. Beats on EPS, beats on revenue. Those are a given. I thought what was very interesting was the secondary analysis coming out of NVIDIA. EPS guidance was raised by 1 to 2%. Revenue guidance was raised by 7 to 8%. You had also profit margins were in the 65% range, gross margins in the 75% range. Anything above 72 is ridiculously strong. I'm doing this off the top of my head. Those numbers came in last week, but one of the things that really stood out to me was on the infrastructure build out. 91% of all revenue that comes into NVIDIA is based on the AI infrastructure build out related to their GPUs. But of that 91% revenue that comes out of their hyperscaler build out, only the hyperscaler is only responsible for about 50% of that. That tells me we're seeing a broadening out here, not a contraction where hyperscaler increased hyperscaler spend is the lifeblood that drives NVIDIA. Well, you're starting to see that broaden out to non-hyperscalers, even though the hyperscalers are dominant. Obviously, they always will be. And they're seeing an increase in spend this year. We're seeing that brought out. And so every segment was a beat against expectation, but I think the real story was on their guidance, 8% increase in revenue guidance moving into the future. That was fantastic. The problem on the price response is everybody and their dog from the very second it was released was talking about China. And I'm like, what are we talking about China with NVIDIA right now? Like, how is that part of the conversation? China wasn't in their guidance from last quarter. China's not in their guidance from this corner, and yet everybody's debating China. I think that's just how things happen when you have such a good report and it's going down, and people don't know how to assess downward pressure and price against a quality report like NVIDIA printed. And so people are going to try to find that one flaw. You know what I mean? That one. And I think you got to dig to find that one flaw because it's not even on the valuation side. I think EPS is telling a great story over time. We've dealt with 6 months of neutrality in NVIDIA. We've dealt with 6 months of neutrality in the S&P. I think those two go hand in hand. And yet in that time frame, EPS has went in that time frame, Mark, from right around $1.05 to $1.30 up to $1.62. You've had 60% increase in EPS while price is going flat. Valuations are coming down. PEG ratios look a little bit better. And so I thought NVIDIA was an awesome report, notwithstanding the lack of price movement outside of that. I thought they were a great report, and there's nothing that I saw in the report that would get me to question the fundamental greatness of NVIDIA.
Yeah, no, I mean it fell in line with Taiwan Semiconductor, Micron, just the insatiable demand. I think Jensen Wang used words like exponentially growing computing demand and skyrocketing adoption of AI agents. That insatiable demand. There's nothing in this report, nothing in recent reports out of the major players to
Well,
indicate
and
otherwise.
If you remember, Taiwan Semiconductor gapped out on a hat trick even of themselves and then came right back down. Didn't really start getting giddy up and going for a couple weeks after their report. ASML had a very good report as well. But guess what? They came down on their report before they started going back up. Micron doesn't, report in the same time period, and they're going to have a report coming up in a little bit of 3 weeks from now. But they're going to have beats and so on and so forth. The top end of the AI trade is these companies you're looking at, Google, Micron, NVIDIA, Taiwan Semiconductor, ASML. Those are all tier one components on the AI trade, and they're all like none of them have a negative earnings conversation like in any
In
capacity.
any capacity.
No.
Like any nitpicking is done by the Michael Burry types who point to hypotheticals where things could go wrong down the road if demand is
Yep.
not stay. I mean, it's all just one day arguments. And Jensen Wang, he also have a video to play. One of the things that came out of NVIDIA's earnings report that was a little unexpected was his commentary on the software sector,
Hmm.
where makes me wonder. I'm like, did Jensen just put in a bottom in software? Uh, did he just put in a bottom for software? Do you got that clip to play?
I do have that clip, and I out of their entire earnings conversation, then there was a lot to be said about NVIDIA's earnings, but that statement on software stood out to me. It did, and so let's go ahead and watch Jensen talk about this, and then we'll have a conversation on it.
And so what's likely going to happen is that agents won't replace the tools, but agents will use tools. That's the reason why we also say agents are tool users. Why write your own, rewrite the browser when the browser exists and just use it? Why rewrite Excel when Excel exists, just use it? And so all of these tools that we use today, whether it's Cadence or Synopsys or ServiceNow or SAP, these tools exist for a fundamentally good reason. And AIs, these agentic AIs will be intelligent software that uses these tools on our behalf and help us be more productive. And so what's likely to happen, and this is very counterintuitive, it's very likely that because we have so many agents in our company now, the tool use will actually go up.
Yeah, I mean, and so tools, when he is saying tools, he is referring to software
Software.
components, the software itself. And so he is making the argument is like, listen, y'all have it completely dead wrong, referring to the market and the price action where software is going to die. He says the counterintuitive aspects of it are that software use will actually go up, and, so when someone's like that makes an argument like that, and there's been a lot of fear,
Is he speaking his friend's book a little bit there though, a
I
little
don't
bit?
know,
Because
but price,
he named a lot of companies that do business with NVIDIA.
yeah, that's
Um, You didn't talk about any company that doesn't do business with NVIDIA there, so I think there might be a little bit of that, but I also think a lot of times, and after the Centrini article from last week and just kind of describing the overall environment, kind of felt like that article was putting in a bottom in the software side of the equation. And then Jensen comes in 2 days later, and basically, we didn't get the clip where he basically said the market's got software wrong. He's like the software is not dying here, and that's basically what he was alluding to there. Is that we're going to be using more software. Our AI agents are going to be talking to their AI agents more, not less. We're going to have more need for software, not less. And so I don't think Jensen is one of those guys where you take what he says with a grain of salt. I think there are those CEOs out there. There's no doubt about that. Sometimes when I listen to Elon, sometimes I'm like, yeah, Elon's trying to get somebody off their edge. Elon's saying something radical. Elon's just being radical. When Jensen speaks, I don't take Jensen that way. And so I took it as him giving his opinion on the software side of the equation. And after the Centriti article, and then you had Jensen come in here, and all of a sudden we're talking about the best price action we've seen in software in a very, very long
in
time.
a long time.
And
Like,
IGV is like really the software ETF to kind of look at, but we did a mini deep dive on software earlier today in the lounge. We're going to be talking about this every single day at Tackle Trading because there's some really good reversals playing out here. I don't think anybody's late. I still think we're very early in this reversal, quite frankly. And so I think we have a little bit of time to be patient here, but this is the best price action we've seen in software coming from a very long time. And you might be, well, what about that breakdown just last week? I'm like, no, that's a positive now for the
That's a
bulls.
positive.
That's a fake out now. You saw that the bears get spooked, they run away. Short coverings coming at some point. So I think, notwithstanding the neutrality in the market aside, like I think there's some really good opportunities on the software side of the equation. And just today, when you look at the heat map, just today, it's just one day, but that one day, software is one of the strongest components of the heat map today.
Yeah, the whole email is a very interesting technical pattern. I know you talked about the art of reversal in Master Trader this last week.
Mhm.
This is the look. This is one of my
It's got a
favorite.
head and shoulders formation right now with the neckline slightly north of 85.
Yeah, I know this is a good look developing. You mentioned that Citrini article again that we discussed in length. It was not the only time last week, Matt, that AI and jobs would come up in the course of market conversation. The Anthropic towards the end of the week, CEO. And did you see these comments where he talked about the AI tsunami
Hmm?
that was occurring? Tell us about those comments.
Well, he just basically mentioned what everybody I think is starting to feel is that he mentioned that within the next, I think he mentioned 18 months, that up to
Yeah, it was a short
50% of white
timeline.
collar work is going to be eliminated. And you add that on top of what we're seeing out there already from the Centrini article to, I mean, my projections are, a massive disruption in the labor market. And so I certainly agree with that, with his general take on white collar work in the labor market being at a threat based on AI. I certainly think it's going to happen faster than other people do as well. Even though I don't think it's going to be 18 to 24 months, I think it's going to be 3 to 5 years in totality. But it was quite the shocking commentary, and I think one thing that really kind of stood out to me is that our government doesn't even know these things are existing yet, and it's very, very sad
No,
that
and
so
that was one of his points too, right?
yeah.
That society governance is not ready. And that was kind of off the
Uh,
Centrini. That was one of their big
and
pieces
they're not
as
going to
well.
be ready. Like they're not even focused on it, Mark. They're not even having a conversation on it. They're still in the hope that the labor market is going to heal itself. It's not. And that's what everybody is screaming that has anything to do with what's happening on the AI side of the equation is this is happening faster than we anticipated. AGI is coming faster than we thought, and the labor market is going to be disrupted faster than we thought as well. And can you tell me one government official that is talking about this in the last 2 months?
No,
One? One
I can't think of
congressperson?
a single one. No,
One secretary? Secretary of
no.
Labor? Anything? 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 Not one. And so, yeah, I think the government is failing the people on this one.
Yeah, no, and we started. I mean, we saw, and I don't know how much of it is AI related, like Block, and I'll bring up Block here in when we do
Uh, I'll answer that question. 100% of what Block announced last week is AI related.
and we'll talk about Block here in a minute and the layoffs they had in the thumbs up, thumbs down segment we do on individual upgrades and downgrades here in a little bit. Now, Matt, towards the end of the week, and this is a story I've been following really closely in the credit markets. One of the things that have been happening in the credit markets is on Friday. And once again, it's so much happened last week. Last week felt like it was like 2 months in itself. Is that you had a larger private credit player in Great Britain fell. This follows, a lot of talk in credit markets themselves, where private credit has been under stress. And Jamie Dimon, Dark Cloud's Jamie Dimon, and you've went back and forth on Jamie Dimon over the years, whether you like him or not. I don't know where he stands in your spectrum these days. He was talking about that, and I just wanted to kind of
Oh, I
highlight it
like
real
Jamie
quick.
Dimon. I have respect for
You,
Jamie
you used to
Dimon.
not
I
like
just don't
Dimon.
trust a damn word Jamie
Oh,
Dimon
okay,
said.
fair enough.
Neither
Maybe
should anybody else.
that's why I got conflicted. Yeah, play the first 20 or so seconds of this.
Jamie Dimon in his interviews does not speak to people. He speaks in code.
See this 6, 7, almost the same thing. The rising tide lifting all boats. Everyone was making a lot of money. I don't know how long it's going to be great for everybody. I see a couple of people doing some dumb things. They're just doing dumb things to create NII or say they're winning in the markets business, something like that.
All right. So, and had it not been for the war, I would have pushed for a larger discussion on the private credit markets, and maybe we will in the weeks. Where you are starting to see some financial stress in private issues. Some of that is linked to the AI trade. Some of the credit ratings, think Oracle and so forth. On some of their private credit, the private credit markets, I don't know how much dumb things are going on out there. But when Jamie Dimon talks about, credit markets and financial crisis, it just piques the hair on the back of my trading head, so to speak.
It does not me at all. Unless he wants to be specific on those dumb things, I don't have a thought process in my head on Jamie Dimon. He could be selling a lot of different things in that comment. So I don't even know what he's talking about, to be perfectly blunt with you.
Listen, if the private credit market, it is just something I want to put on our listeners' radar, because I have a feeling we're going to be talking about it more in the coming weeks. And,
well, Jamie Dimon should list out what those dumb things are so that we can all have a conversation on it instead of just being random about
it. Fair enough. Well, gold, one of the many things and many arguments for gold is not only potential stress in the credit markets and war and government spending and all of that, but the technical story on gold has been stellar for weeks, man. And I love in some of the headlines I saw today in the market about gold up on. I'm like, gold's up because it's gold, right? Do you link any, geopolitical risk premium in gold, or is this just the continuation of the goodness we've seen in a long time?
Well, I definitely think there's a risk premium. Listen, we're not talking about gold above 5K right now. If there's not a massive, 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 massive risk premium built into gold. It's just not happening. If there was not a risk premium in gold, we'd be talking about gold at 2,600. And so, yes, there is a massive risk premium already involved here. And I think that's one of the reasons why, despite the fact that we're seeing very aggressive geopolitical activity out of the Iranian military conflict, we're not seeing that big of liftoff here. And so I described it earlier today in the Traders Lounge as just another day that ends in Y for gold. And I maintain that. Like, there's nothing I'm seeing in the gold chart that would suggest that any additional volatility is here in any capacity. So I already think there's a premium already built into gold. That's why through alleviation events, you might see some snapback volatility. So that's something to keep an eye on. But as of right now, I just got this as another day that ends in Y for gold.
What wasn't another day that ends in Y was Bitcoin. Surprising strength on Bitcoin. In the newsletter this week, we wrote about Jane Street and some of the scandal behind Jane Street and maybe the stranglehold they had on the crypto market. But ever since Jane Street was sued in their lawsuit last week, price action's been pretty good. But this is probably, out of all of the charts today, Matt, the one that surprised me the most.
I'm not too surprised. I mean, software recovered, tech led a little bit, cash open was strong, risk assets got a bid here today. And then secondarily, I mean, the pattern developing here is actually getting to the point of what I would describe as quietly impressive. I thought Bitcoin the last 2 out of the last 4 days have had two two of the best days it's had in the last few months, quite frankly. I think it stands out. And I think there's another couple things that stand out to me in Bitcoin because I do really like the development. And one of the things I really like about the development is I'll just kind of give it the 73,000 level. You look at 73,000, and this is an old resistance level, principal polarity level. And so you're developing on the longer term charts at a much, 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 much better situation this go around than what you were developing right here after the initial downward pressure on price. That's number one. Number two, the support level that you're dealing with right now is a wonderful backstop versus what we were dealing with before. Before we were dealing with an 80K level backstop that had a single data point to it and some choppy analysis to the left of the chart. This time we're dealing with the 60,000 backstop, but you have that 200 weekly right there to support it as well. And then you got 50K, which is kind of the ultimate support zone right there at 50K. And so you got to like the overall where the pattern is developing on Bitcoin right now much better than what you developed the previous time. The third point I'll make on Bitcoin here from a pure technical perspective is regardless of how you see it, you're coming at the end of that downtrend. That downtrend, when you largely see it through the lens of Elliott wave and trending analysis in general, would be the conclusion of C. You have the first downward pressure in price, A. You have the pullback, B. You have the third downward movement in price, C. And that comes to a proper conclusion. So either one, we're going to see a reversal with the birth of a new trend to the top side, or B, we're going to see a continuation trend to the downside. But one way or the other, a new trend starts here. And that's what I feel is very, very compelling. So I don't have an aggressive thought on it yet. We're kind of in the middle of what I would describe as pattern development. Bitcoin certainly could consolidate for as long as it wants to, but I do, and the more time it does consolidate, I think is a winner for the bulls here. But at the end of the day, I have an opinion at the 73,000 level, and any good reversal will find its ultimate conclusion with confirmation above 73K.
Yeah, it's just been fabulous price development. I was surprised at, a 6% up day with the geopolitical headlines. Normally, I mean, Bitcoin for years on geopolitical negative headlines have just sold off. They haven't rallied, think trade war, think tariffs, think, whatever it may be, they have been very geopolitical headline adverse, kind of like the opposite reaction of gold. And so that's what kind of took me off guard on the strength. But great
But doesn't
breakdown.
it stand out to you when things like that occur, where it's
Yeah,
like you weren't anticipating this?
yes, it
and now
does.
you see
Absolutely,
it, it's like
100%.
hit you like a ton of bricks there.
Like if you follow Bitcoin as closely as I do, you have there's actually this like kind of sarcastic skepticism in your head that the anti-geopolitical risk off asset, right? Where you see gold on geopolitical headlines. Bitcoin has done just the opposite. And so when you see the opposite occur, it's going to catch your attention.
Mhm.
It's going to catch your attention and have more strength than that. So not a bad look. That's the most positive things I've heard you say about Bitcoin in a long time.
Well, it happens when you start developing. Like, I'm not the guy that's going to try to put in a low of something. I'm the guy that's going to come in after beautiful, proper reversal and pattern development. And I think it's had really, really good pattern development. It's got to come to a proper conclusion, though.
All right. So, really super busy, and we haven't even touched on the war yet. We'll get there in a second, but we still got a lot, some unemployment report this week. When we look at the week ahead on the economic calendar, we got this is unemployment week, right? And with unemployment front and center, Fed dual mandate, right? That monthly unemployment report, which one could argue is the most important economic report of the month, coming up on Friday, certainly will help, shape narratives there. 58,000, right? We'll see what the magic numbers come out of the administration on how they beat that and what is revised down after. We know the game there. But lots of data on that important report. And there's some interesting earnings this week, Matt. Some of the, CrowdStrike on Tuesday, Broadcom. What are you looking at in the week ahead?
Well, I think it's honestly a big week. If it wasn't for big time macro Middle Eastern wars going on, I think that's going to take up most of the oxygen in the room this week. Obviously, those are very sensitive geopolitical situations that rightly so takes the market attention. But outside of that, quietly, I think there's some important data coming into the market this week. First and foremost, from an earnings perspective, a little bit more important of a week this week than, say, last week. Looking forward to see, for example, you got things on cyclical that are going to have an impact on the market. You got things on the AI trade that's going to have an impact on the market. For example, on the AI trade, you got big dog of them all, not of them all, that's NVIDIA, but Broadcom. Broadcom is a massively important company to the AI trade. But you also have CrowdStrike out there. Recently, the cybersecurity companies have been under threat through the same degree of conversation that software has. And we hear from CrowdStrike this week. We hear from PanW this week. You also hear from semiconductor darling Marvell in the AI trade. They're very important on the AI trade side of the equation. In fact, they're in the high 80s on the MOT score. One of the highest tier 3 companies on the AI gold rush, Marvel, with the highest MOT scores is very interesting to me. But even on the cyclical side, from Target to Best Buy to Costco to Kroger to A&F to, I'm missing the big one. What's the big one? Where's my big one? Can't see it, but you got a lot of cyclical out there this week that are going to be very, very, very important as well. So I think there's a cross section of cyclical to AI that is very interesting on the earnings side of the equation. But Broadcom is definitely the most important one. On the economic side of the equation, we've already seen manufacturing PMI that came in as a beat this week so far. The labor market data is obviously the most important here this week. So if I were to say the most important data that we're going to be navigating this week, A, it's going to be the Iranian military conflict. B, it will be labor market numbers. C, it will be Broadcom and some of these secondary earnings reports. But some very important data coming into the market this week.
Oh, absolutely, 100%. But it is true that, the oxygen in the room will be consumed by the war. And Matt, whenever a war breaks out, it feels like, just following the events is a full-time job, right? Not only
especially
like
Twitter, they like to talk about the war like it's a scalp trade, not even a day trade.
I mean, seriously, just the raw amount of information that has occurred in the last few days. But just from a high level, the U.S. and Israel launched, this joint military operation on Saturday. First with U.S. strikes, then with Israel. Reports of, I think the U.S. military has said over 1,250 targets in Iran have been struck. A lot of the top leadership in Iran has been killed in this, these initial waves.
I want to say like over 40, 48, something like that.
The IDF intelligence chief said we've eliminated in 40 seconds more than 40 of the most important people in Iran, and then he says we haven't finished.
That was on
yet.
The opening salvo.
The Iranian Navy, CENTCOM said that there was 11 ships
to the sea
is gone, and so this has been a large scale, massive joint operation, and there has been some spread out. We'll talk about like here in a minute the Saudi Arabia refinery that got hit. We have lost some U.S. service, people in the attack that you talked about at the start of the podcast, and our hearts do go out to those families. But it's been a large-scale operation. It's been very fast moving. Trump says that bigger waves are coming, right? Bigger waves are coming. And we'll talk here in a few minutes about, the length of the war and what that might be by markets. But Matt, just want to get your initial take on, as you have digested, you're a news junkie on when there's not a war going on, right? From a, not from a market perspective, just from a watching it perspective, just what's your general take, what's been going on in your head?
From a human interest perspective?
Yeah, from a human interest. And we'll dive into markets here in a second.
I don't have many thoughts on the human interest other than my heart goes out to the men and women of the military, and I just hope they all of our thoughts and prayers are with the military as they conduct very sensitive military operations. And like I said at the very beginning, like to me, it doesn't matter if you agree or disagree with the policy initiative. To me, it's just a matter of we always support the U.S. military because they support our ultimate freedom. So, on the human interest side of it, obviously, the Iranian situation goes back not days, it goes back not weeks, not months, not years, it goes back decades. Like this has been a conflict ever since the 1979 Iranian hostage situation. And so from 1979 until today, after the Iranian Revolution of the 70s, like this has been part of the conversation. So I don't know how much historical concepts you want to go through here, but on the human interest side of it, my thoughts are all with people that are living in fear on the ground and our military that is executing very, very sensitive military operations right now.
Is the attack as large as you expected it initially? The scope and the scale of it?
It's about what I anticipated. We're talking about the largest military buildup in the region since 2003. We've had two armadas there for the better part of the last couple weeks. I believe the last aircraft carrier got there late last week, right off the coast of Israel. And you really had a couple different options that the president was faced with Iran. Option one, continue to the diplomatic route and see if you can find a negotiated deal with Iran on a nuclear agreement. It did seem like Iran had come to the table to a certain extent, was offering some things such as we won't continually build our nuclear program. We will only store so many, uranium and so on and so forth. But, Trump said he didn't believe what they were trying to negotiate to, and he thought they were trying to stall. And so, the option one was kind of put to the back burner. Option two would have been, okay, do we want to just simply take out the missile silos and the missile production and, re-hit the nuclear establishments, or do we want to go for regime change? And that's obviously the most aggressive is regime change. And so I think I'm a little surprised in the sense that, man, they tried decapitation from the very beginning, and they went aggressive from the very beginning. And so there was no side punches thrown. It was aggressive from the very beginning. They're going at regime change. They, cut the head off the snake from the very, very, very beginning with the initial bombing on the Ayatollah's compound and took out the Ayatollah and a bunch of his senior officials. So they went for regime change, and I do think that's a little more aggressive than what I personally anticipated. And now we're starting to see it kind of even expand into other Middle Eastern countries, and we're starting to see it expand into other Gulf states. And so obviously it is a little bit more escalatory than what I thought it would be. And so, yeah, I would say it is slightly more escalatory than I thought it would be.
Yeah, no, and where it goes
But I
from
certainly
here,
anticipated strikes. Like
yeah, you did. You were absolutely, yes. No one that has listened to Matt over the last couple of weeks in our program.
You do not. I don't know how many times I've said it, but you do not put that many military options.
You said it a lot.
Doing something.
You said it a lot, right? And you dead on that. Now, Matt, where this goes from a market perspective likely depends on oil and how much disruption occurs in the oil market, right? Assuming that there isn't World War III and those type of fears that can sometimes manifest themselves whenever you have war and escalation, right?
World War III, and we don't entertain stupid conversations people have on Twitter.
So, assuming that is not on the dialogue, then it becomes an oil story, right? It becomes a question of
for the market,
from the market perspective, not for geopolitics, not from the human interest, but just the cold calculating market. It becomes a market story. Naturally, higher oil prices play into inflation. They can serve as a bottleneck to growth, right? we've seen that play out many, many times over the decades, right? That is a very well-known market equation. Now, what is not a well-known market equation is how disruptive these geopolitical conflicts are when a war breaks out. There's a lot of speculation. There is a risk premium built into the market. We'll explain about where that disruption may occur here in a second. But we had that gap up on oil, Matt. We had that gap up on oil, bigger or larger than you expected, heading into the weekend.
Less.
Less.
Yeah, well, in totality, like I'm not surprised at the 75 level that it went to. That's a pretty big jump in oil, to be perfectly blunt. But it was really kind of what happened initially after that. Like the least shocking gap in the history of mankind was the gap on oil coming into the futures open on Sunday night. Everybody in the world knew it. There was no debate on it. It was just a matter of what was going to occur after. And there was no gap and runaway scenario here. And I thought that was very telling by the market, because it's hard oftentimes to see truth in what's happening with that Iranian war. It's hard to see exactly what the plan is. It's because, quite frankly, we haven't been told what the overall plan is. We're trying to read the tea leaves, quite frankly. And I think the government, and specifically the president, need to do a better job of laying out what that vision is and what the plan is to the American people. Because right now, the American people, from the poll I saw earlier today, 41% of the people support military strikes on Iran, 59% do not. But if this escalates and they start talking about boots on the ground, which Pete Hegseth did not say no to that.
Yeah, we have a clip of that coming up.
That is not supported by the American people. Like 80% of the American people are a no on that. And so right now, like, the administration really hasn't even tried to sell what they're trying to accomplish yet. I think we know what they're trying to accomplish in regime change, but like, it's hard to see regime change get accomplished without boots on the ground. Like, and so I do think the president and the administration needs to do a better job of trying to lay out what the vision here is, instead of arbitrary timelines and arbitrary accomplishments. Like, what specifically are we trying to achieve here? What are we trying to achieve in what time frame? What's after? What's the day after tomorrow look like? You know what I mean? And right now, I question whether or not there is a solidified plan on that, because I'm not sure Trump, took it to that far in terms of, he's had great success in Venezuela on these very aggressive military strikes: get in, get out, accomplish what you need to accomplish, declare victory, let everybody complain about it for a month, but move on, right? I don't think that's this. Like, we could get stuck here with Iran.
Yeah, we'll talk about that more in a second.
So that's going to be a very interesting part of it. But
yeah, no, and we'll talk about that more in a second, because that's a important a part of the equation. I want to highlight and just maybe educate a little bit on, why Iran in particular, some of the risks to the oil market, and then maybe to the broader markets if oil sustains at a higher price or really goes up, is important. And a lot of it has to do with two things. We'll talk about other oil infrastructure here in a second, but I want to play a video on the Strait of Hormuz. Just I thought this video, and we'll play the first minute and 20 seconds of it or so, does an excellent job basically geographically allowing you to see the waterway and why it is important to global oil flows.
If Iran blocks the Strait of Hormuz, what impact will it have on the entire world, and which country will be affected the most? First, let's understand what the Strait of Hormuz actually is. It is a small area of just 33 kilometers located between Iran, Oman, and the UAE. It is a narrow sea passage through which almost 20% of the world's oil supply flows, nearly 17 million barrels every day. This oil comes from 8 countries located in the Persian Gulf, including Iran, Iraq, Kuwait, Bahrain, Qatar, Saudi Arabia, and the UAE for the United Arab Emirates. Saudi Arabia, Kuwait, and Qatar, 90% of their oil exports pass through this narrow route to reach the rest of the world. If Iran blocks the Strait of Hormuz, following countries will suffer the most damage. First is India, because it imports 85% of its oil, and 60% of that comes from Middle Eastern countries like Iraq, Saudi Arabia, Kuwait, and the UAE. Fuel prices in India would skyrocket, and as a result, everything related to oil and all industries would face severe disruption. Industries could shut down, there would be job losses, and the economy would be severely affected. The second most affected country would be China. China is the world's largest oil importer, bringing in 10 million barrels of oil.
All right.
40% of China.
Cut it there. And so one of the fears whenever you've had war or threats of war with Iran is Iran's ability to curtail or just the natural hesitation for that large, massive 20% through that little bottleneck of water. What did they say? 33 kilometers?
21 miles.
Yeah, 20% of the global's oil supply passes through that strait.
Yeah, and not just 20% of Middle Eastern supply, like
the
total global supply.
And so when you deal with the intrinsic nature of things in the economy, I mean, that is a massive percentage of the oil that passes through. And Matt, I don't know if you saw this today, but an advisor to the IRGC says the Strait of Hormuz has been closed and they will target any ship. Now, whether or not they have the capability through drones or other things that pass through that, that's a brave tanker that wants to challenge those type of statements. And that we've already seen a disruption there. But this is one of the central stories from a market perspective moving forward. What happens to that 20% of the oil supply that passes through the Strait of Hormuz? And Matt, my question for you is: do you think that this is this? I don't want to say worry, because it's not just a worry; it's actually happening as we speak, right? Is this going to be directly tied to the length of the war itself and any de-escalation or how that proceeds?
Well, I mean, it certainly could, yes. For oil markets, that's obviously one of the bigger concerns. There's been a few times in previous history where straits were shut down or impacted, and we saw spikes in oil. You go back to the one that happened in the 1970s, and you had massive spikes on oil. So I definitely think it is one of the things that is certainly being looked at right now, both by Iran and everybody else. You've said Iran is talking about shutting it down. I've seen other reports out of Iran that suggest that they aren't looking to shut it down, and I would strongly suggest that Iran's not even talking to one another right now. Their military isn't even talking to one another right now. So you might hear something from a spokesperson, but the left hand doesn't know what the right hand is doing.
Makes sense.
Because the head got cut off on Saturday. Does that
that makes perfect sense.
Yeah. So there's a lot of chatter out there, because
it's not even disinformation, right?
Shut down, you wouldn't see a gap up and then a sell down behavior on crude oil. That's not what would be transpiring here. Now, have we seen 3 or 4 of the shipping containers get hit by ballistic missiles? Absolutely. The Houthi rebels are probably an increasingly part of that equation outside of Iran. That's one of their proxies that Iran uses to conduct a lot of their terrorist activity. The Houthis are up there with Hezbollah and Hamas. So we've seen Hezbollah start to do a little bit of actions in Lebanon. How long they'll be able to do that, I question. I don't think that Hezbollah has nearly the capability right now that they once did, thanks to Israel. When you're looking at the Houthis, they certainly can be problematic in hitting shipping containers and whatnot. But I openly question how much Iran, who, even if they wanted to shut down the strait completely, do they have the military capacity necessary to do that?
Well, they don't have a navy anymore.
They don't have a navy anymore. We sunk 11 of the ships. So
So
like
it'd be
I'm
drones and
certain they have
missiles.
mines, drones, and
Mines.
on the coast they have, like, think about the Maginot Line back in the day, Mark, with all these, embedded 50 caliber machine guns. They have that on the coast as well. But a couple of our F-35s taking strategic bombing runs will take care of that. We have air dominance right now. We can do whatever we want in Iran right now, from the air standpoint. So I'm not even sure, even if Iran had wanted to completely shut down the straits, I'm not sure they could completely. They could certainly impact traffic, but could they shut it down for any prolonged amount of time period? And then next, like, if you're Iran and you wanted the Gulf states to work with you in any capacity, what are you doing from a strategic perspective, hitting all these Gulf states with ballistic missiles? They're
And that's
hitting
the thing
mine,
about
for crying out loud.
and that goes
It's a
on two.
ridiculous military strategy, in my opinion.
Well, but once again, it might not be a military strategy. If the left and the right hand don't know what each other are doing, it could just be one-off actions, right?
It could be one-off actions, but it feels like they were told to hit these before. And so, like, you got Gulf states from every one of those Gulf states are getting targeted. And it doesn't feel random or one-off, but you could have some of that going on. Yes, absolutely.
And that's
Whether it is or not, it's not a good military strategic philosophy to have if you're trying to get the U.S. to try to do something on terms of a negotiation if you shut down the straits. Because, Mark, the number one thing I think there's two things that would shut down aggressive military actions from an economic perspective. And I think shutting down the strait and oil pumping is one of those. I think the bond market cracking is one. We've seen the president come off aggressive policy with the bond market cracking before. Mark, the epicenter of the president's economic agenda is cheap oil.
it is right there at the literal epicenter.
If you don't get cheap oil, bye-bye rate cuts this year. Like, just bye-bye. Increasing oil will have this compounding impact on inflation. And we're already dealing with elevated PPI prints the last 2 months. We're already dealing with a PCE report that is going to be elevated based on just the average math of the PPI report.
And along those lines, Matt, I don't know if you've seen any reports. I haven't seen any reports of infrastructure within Iran hit or targeted in the attacks.
Not from the U.S.
Not from the U.S.
Yeah, but that could occur if Iran hits Saudi Arabia's refineries. We have seen some retaliation on refineries right now. In fact, Saudi Arabia's one of their biggest refineries. I think like 17 million barrels comes out every day. Got hit.
Yeah, it's the Ras Tanura complex.
Yeah, we haven't seen massive expansion there, but that is one thing that I think could get the president to quickly sit down and try to negotiate some degree of ceasefire and do what he does and declare victory and then move on to the next topic is if oil continually goes up. But the problem for Iran, I'm not sure they have the ability to actually shut down the straits for any degree of long-term situation.
Yeah, and on the infrastructure itself, it doesn't appear like that there was a tremendous amount of damage to the Saudi Arabia refinery. But
production hasn't been stalled that much here.
And this is, as long as it stays contained, right? Markets are very patient. Markets are very, they know how to take a hit, so to speak. And as long as there is not disruption to infrastructure, the Straits of Hormuz, because like I have seen like 100 million worst case scenarios in the last few days put out by different banks, they all require for any of them to take infrastructure and critical shipping routes to be disrupted for a length of time. And so we haven't seen that yet. Obviously, it's a fast moving thing, but that's where the market is. And crude oil, it's funny, Matt, a lot of traders don't look at crude oil ever. Crude oil is very much going to be a temperature gauge of what is happening.
Well, I think it'll tell some truth against what's happening in the war front too.
Yeah, and so it is going to give, like, crude oil is going to be a chart that It was the first chart I looked at on Futures Open. Is a, and traders that don't even look at it. Crude oil has a tendency of really letting you know the truth in these very rapidly. Like, it lets you know really quick. Last June
Yeah.
when it said, nope, this is over between Iran and Israel, you saw it on the oil chart almost immediately, right? And so didn't get that read today, but it was less than expected. And one of the great variables here, Matt, because all right, no disruption yet, this and that, is just basically how long this goes. Because the longer it goes, the more things can go wrong. I think, is basic, a basic statement that I think would get a lot of head nods, right? The longer it goes, the more things will go wrong. And the administration come out today, have just a couple videos to play real quick, came out today, and basically didn't want to limit things, so to speak. President Trump spoke on this this afternoon.
To the American people, and a threat indeed it is. We have the strongest and most powerful by far military in the world, and we will easily prevail. We're already substantially ahead of our time projections, but whatever the time is, it's okay. Whatever it takes, we will always, and we have right from the beginning, we projected 4 to 5 weeks, but we have capability to go far longer than that. We'll do it. Whatever somebody said today, they said, oh, well, the president wants to do it really quickly. After that, he'll get bored. I don't get bored. There's nothing boring about this. Do you agree with that, Pete? I don't think there's anything, Mr. General, there's nothing boring about it. Somebody actually said from the media, I think he'll get bored after about a week or two. No, we don't get bored. I never get bored. If I got bored, I wouldn't be standing here right now. I guarantee you that. To go through what I had to go through.
And Matt, initially after the attack, Trump threw out, on, I think it was Sunday morning, in an interview with the Atlantic, that Iran was ready to negotiate. I don't know if there was any veracity to that or not, but this was the first time I'd heard him.
Who's negotiating?
Yeah, I mean, that's the thing,
because
right?
he also said in that same statement, but the guy we had identified to take over was killed in the initial airstrikes, and then the next guy we had identified was killed in the initial airstrikes. I don't know about that, but
this is the first time I'd heard him, because push the potential of a longer escalation out. And Pete Hegseth, also, did was speaking today, and basically wouldn't commit to the lack of troops on the ground, wouldn't commit to that.
So from the president's perspective, I've heard him talk a couple different timelines. Number one, the initial timeline was 3 days. That was the initial timeline. Then things occurred, and now we're talking about a 4 to 5 week time frame. Again, I don't know how much is accurate there versus things got changed after what happened through the weekend. I'm not sure. We don't really know exactly what the military plans are from a timeline perspective, but I can just go from what I've kind of gathered out there. The initial timeline was military strikes for 2 to 3 days. Things had not gone according to the initial plan, so they extended that. And on their extension, because the military has plans for plans for plans for plans, right? They have plan A, and then if plan A doesn't work, they got plan B, C, D, E, F, G, H. They have plans for days. And so they probably extended it off of some of the initial plan, and they went to 4 to 5 weeks. And based on that 4 to 5 week projection, the president suggests we're in front. But then you got Pete Hegseth, if regime change is the goal, it's impossible, in my opinion, to
and one would
accomplish
assume it
that
is, right?
without boots on the. It has to be, if that's
It
what
has
they're
to
doing.
be.
You can't go this far without that being the goal. And so, if that is the goal, 4 to 5 weeks is not going to get that job done. A weekend is not going to get that job done. And I think most people understand that. So
do you think they're setting the stage starting today, realizing that, or updating the plans and kind of like late?
I think there's going to be some in the administration, most likely not the president, that will try to sell, maybe not sell is the proper word, but get the public ready for boots on the ground. I think at the end of the day, they do not want that. It is a political death sentence, in my opinion, for the Republicans if boots go on the ground here. Like, it's an 80-20 issue in America. Like, Republicans are the best at 80-20 issues. This is 80-20 in the opposite direction. So I think they're going to do everything they can to not have boots on the ground. But if regime change is the absolute goal here, it's hard to see that accomplished without some degree of boots on the ground. Even if those boots on the ground are from an advisory capacity like we did in the early Vietnam saga. We didn't put so-called boots on the ground till later in the 60s, but in 61, 62, 63, we had advisors on the ground. And so there could be a lot of different scenarios here, but if regime change is the overall goal, all I fear is if all we do is military strikes from the air, we're just going to set up 100,000 Iranians to be massacred when they try to do something against a government that has 1 million Iranian Revolutionary Guard in it.
Yeah, no, and so obviously interesting saga where
one boot on the ground, one American boot on the ground, just one represents a hell of a lot.
It does. And so there's obviously this is going to be with the market. As long as this story continues, it's going to be a market story. It obviously will have different.
Ceasefire by the end of March, yes or no? That's the poly market odds right now.
Oh, what are the odds?
I don't know what the exact odds are, but it's in the favor of I think it's like over 60% ceasefire in March. Would you say yes or no?
I would bet yes.
I would bet yes to a ceasefire, but no to the cessation of military hostilities.
That makes sense, actually, right?
Well, we have a ceasefire in Gaza right now, but we still have people shooting each other.
Yes, that would make sense. That would make sense. And in that scenario, markets should be able to withstand that, assuming other infrastructure is not hit. Right?
As long as there's not a massive military operation against energy facilities.
Those are the headlines the market are.
Does Iran, because the wounded tiger, does Iran just start throwing out any haymaker they can and hit specifically Saudi Arabian oil infrastructure?
And those are going to be the headlines, because the Strait of Hormuz, that is going to be just this ongoing thing. You're not going to get, like you said, you're not going to get clarity on that.
No, I don't. I think Iran's going to try to do it, and I think there's going to be people like me that's like, yeah, but 65% of traffic's still going through.
Yeah, and it's if the headlines the market is not going to like are the ones that send oil up, and those are going to be if infrastructure is hit, right? And so becomes oil chart. Put it on your watch list if it's not there already, because it's going to tell a lot of truth in the coming days. Yeah, ready to do just a real quick version, rapid fire, thumbs up, thumbs down on analyst upgrades and downgrades before we close out the show.
Yeah, let's rapid fire this bad boy.
Let's do rapid fire. All right, so game I like to break out with Matt every once in a while when there are a lot of interesting analyst upgrades and downgrades. Like to give the upgrade or the downgrade, and then just get Matt's quick take on it. So let's fire away. JP Morgan upgrades Netflix to buy from hold. Netflix, well, it decided to take off after dropping its pursuit of Warner Brothers Discovery. JP Morgan cited its under-monetized ad business and strong content.
No, I'm sure that had everything to do with it and not the Warner Brothers elimination. I'm sure, JP. I'm going to sell their nonsensical reasoning for that, but agree with the upgrade in general. Netflix has been one of those targeted companies that, the community at Tackle has been really kind of tracking here. I'm just very upset we didn't get a nice little 3-bar high base at the 50-period moving average. This thing just kind of ran on us. I think it's secondary pattern wash. There is absolutely no doubt about that. Agree with the upgrade, disagree with the logic. This thing got upgraded because they did not buy Warner Brothers. Just call a spade, JP. You don't have to lie.
XYZ, Jack Dorsey's
Because I just
block.
want to be clear, Mark, that existed before the Warner Brothers deal
Yes.
got destroyed.
Algo's had fun with this one for a couple months. They've
Yeah.
lost control. You
Yeah.
know, price action back in place. XYZ, Jack Dorsey's block, cutting 40% of its workforce, saying intelligent tools, AI, have changed in what it means to build and run the company. Morgan Stanley upgraded the stock to a buy from hold after those cuts.
There's nothing the market likes more than people getting laid off. It's one of the sad realities of the financial world, but it is one of those realities. And I'm gonna go ahead and agree with the upgrade. I think Block is one of those targeted ones coming out of potential reversal type situations, coming from a pretty good handle right around the 50 level. Block's also a really good covered call type candidate as well. But I'm going to sell old Jack Dorsey here. I'm already sick and tired of hearing from the CEOs of these companies laying off 40% of their company and being like, we care so much about you. Like, I'm already sick of hearing it. If you cared so much about these people, you wouldn't be laying them off for financial reasons when your company is literally printing money right now, Jack Dorsey. You're not underwater here in Block. You're not struggling as a company perspective. You have good profit margins. You have good revenue growth. You even said in your recent earnings report how financially stable your company is. In this same financial report that you were talking about how financially stable your company is, you laid off 40% of it. And you said you're doing that because you were just thinking about these people and that you didn't want these people to be wondering over the next couple of years whether they're going to be laid off. So you might as well just lay them off right now. Jack Dorsey, leave the altruism at the door when you're laying people off. Rip the Band-Aid off. They don't want to hear your bullshit nonsense. And so I buy the upgrade and the logic of the upgrade. I am already sick and tired of hearing these CEOs acting all altruistic when all they're doing is trying to increase profit margins, increase bonuses, increase price, and not care 2 cents about the people that work for their company. You were a profitable company before you laid these people off. You laid these people off so you can get hyper efficient so that you can get a very big bonus and everybody else can get very big bonuses. So I'm going to sell the corporate bullshit on how they're all going to tell us in this great AI layoff age, how they're going to tell us how it's about the consumer. These layoffs are about you. We care about you. Get the hell out of here.
Well said, sir. Well said. NVIDIA now, not an upgrade, but a removal of Micron as its top semiconductor pick by Morgan Stanley and put NVIDIA instead of Micron as its top semiconductor pick. Buy or sell the move.
Micron's not a semiconductor stock.
It's a semiconductor stock.
They're a memory stock.
It's the same thing.
They're not the same thing. They're literally completely different companies than NVIDIA that builds GPUs versus ASML that builds the tech for the chips versus what Taiwan Semiconductor does versus what Micron does versus what Google does. This is the problem with the AI trade is people hear TPU out of Google and they think it's the exact same thing as GPU out of NVIDIA. They don't even understand what's going on with Micron, and it's because the banks are... I digress. I'll agree with the upgrade because it never should have been part of the conversation to begin with.
Palantir, UBS on Friday upgraded them based on AI software and robust government contracts.
On Friday?
Yeah.
Yeah, they knew some inside stuff coming in on Friday night there. Palantir, I'll agree in one capacity. The upgrade's probably on the fundamental side of it. I would not upgrade the fundamental side of Palantir. Absolutely not. This thing is a massive, massive high valuation component, and that has not gotten alleviated with the 25-cent EPS against the 21-cent last year or last quarter. So still valuation nonsense here. I disagree with the upgrade on the fundamental side of the equation. I do on the same kind of wavelength here, not fundamentals but technicals. See a pretty clean reversal playing out here too.
One more, just because I like the chart so much. Honeywell upgraded to a buy from a hold. Just really liked that chart. So
I know it's a great company. Yeah, like I don't have any disagreement on a consolidation, high base breakout, beautiful, type pattern on a stock that should get a little bit of love due to what's happening in the world right now.
I thought it fit the moment, a good one to end on. Well, brother, I've enjoyed the conversation. I gave me some stuff to think on the oil conversation. I thank you for that. But send us out.
Yeah, if you love the Trading Justice podcast, best way to support us, give us a nice little like and share, leave a comment, tell somebody about it. And if you're ready to become a part of Tackle Trading and start having those day in, day out conversations in the Traders Lounge and sitting in our educational shows on the Coaches Show and the Cash Flow Club, and make sure that you're ready for the market every single week with the Tackle Trading newsletter and the Traders Report, go over there to tackletrading.com, hit that free trial. You can also hit it in the description below as well. And while you're there, sign up for the amazing Precision Trader webinar. That's coming up in a couple weeks. The link is in the description as well. And I truly do hope everybody has an amazing and blessed week. And if you need anything from Tackle Trading or the coaches of Tackle Trading, hit us up in the comments section in this video, or you can hit us up in our Discord channel as well. You can hit that link in the description as well. So for all your tackle trading needs, hit the description. For everything else, I hope everybody has a wonderful week.
Have a great week, everyone.